everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfeld. Here are several things to pay attention to for the upcoming trading week. Last week, we saw Nvidia report earnings, which was spectacular, astounding on pretty much every category that they were in, record-breaking numbers, and that vaulted these markets higher. We saw the NASDAQ all-time highs. You saw the S&P all-time highs. You saw the Dow Jones Industrial Average all-time highs, and then the Russell. Yeah, not even close. Russell, well, struggling, even potentially down on the week for the Russell, but pretty much everything else, fantastic. And will that energy continue into this upcoming week? Probably. However, I do have a couple pieces of information which may stall or slow down that euphoria that is pouring into the market right now because of Nvidia and technology. So let's take a look at your upcoming earnings calendar to see what is coming up this week. We have 994 companies reporting this week. Quite a lot, although none of them are A-listers. There's no Magnificent Seven stocks here. However, on Monday, you've got Workday and Lowe Motors. Now, I'm particularly interested in Lowe Motors because we saw last week Rivian report bad numbers. They missed earnings and lowered their forecast. You saw Tesla struggling a little bit and a lot more competition in that EV space. BYD also becoming much more of a competitor. So there's a lot of competition in that space. I'm curious to see what Lowe Motors, which was, I would say, in the top 5 of EV vehicle makers, what are they going to report and what's their forecast for the market going forward? Now, other things happening this week with regards to earnings. On Tuesday, you have Lowe's, you've got American Tower, you have Monster Energy and AutoZone. Wednesday brings you Salesforce, TJ Maxx, Snow, and HP. And on Thursday, AB InBev, NetEase, Dell, and Autodesk. So that really rounds out your week of your earnings calendar. Again, no super heavy hitters. I know the excitement around things like Lowe's or Anheuser-Busch, Budweiser, AB InBev, all those the same names for the same company, but nothing quite as impactful as Nvidia last week or Apple and Microsoft and Google and Amazon the week before that. So it'll be fun for those of you who do have some of these positions in your portfolio. Be defensive and, of course, try not to trade these things because it goes against what we teach at tradingacademy.com, which is manage risk. We just don't know with earnings. They could beat earnings, miss earnings, raise forecast, lower forecast, and stock price could go any direction that it wants. It's very unpredictable, so be careful out there. Moving on to our second piece of information. That's about growth. Now, what might derail this euphoria? Because we have historic levels of greed in our markets right now. The CNN guide for greed says extreme greed in the financial markets right now. Typically, when you get extreme greed, that leads to a nice little market correction. We'll have to wait and see what the market holds. Here is a piece of information I think may, and I say may, be a potential derailer to the party. That's GDP. We have two pieces this week, actually, and growth is the first of the two. Coming out Wednesday at 8:30 a.m. Eastern Time, the preliminary GDP number comes out. That's quarter-over-quarter reading, but people are really looking at the annualized rate. As you can see on the right-hand side of your screen, the previous number was 5.2, and that equated to a 3.3% GDP rate annualized because it takes the last 4, and as you can see on your screen here, the most recent reading at 5.2 has been a big jump over the previous 2 quarters. So it looks nice from a trend perspective, but what is the market expecting? Well, the market is expecting that we are going to come out at 3.3%. Again, 3.3% being the annualized, meaning if it's quarterly, take the last 4 readings of the GDP, smooth those out. As you can see up above me here, right over here, you've got this little guy, the last 4 is this one here, that little guy, that one, and then the 5.2. Well, those 4 taken, divided by 4, equals 3.3. The expectation is right now that we're going to come out at 3.3. What does that mean? Well, that means that if we look at the screen here, a little arrow is going to pop up right there. Boom. That means that the quarterly reading should be lower than 5.2, probably around 4.2, somewhere in that region to balance out and make 3.3. So the expectation is quarter over quarter, we saw a slowdown in GDP, but because we're losing this little guy right here, this little one's going to fall off the calculation, that bumps things up. So all in all, we're going to expect it to have a 3.3% GDP increase, which is in line with our previous quarter. So basically, everything's staying the same with GDP. So no shocker there. But here's where I think we might see a little bit of consternation, a little bit of problems, and that's going to be Thursday at 8:30 a.m. Eastern Time with the Core PCE Price Index, which gives us a much better view of U.S. inflation numbers. Now, I want to do a couple different things. As you can see on the screen here, I went all the way back into 2006 across the bottom. You can see the dates there to show you historically what inflation looks like. If you look at this, we only have had like 6 quarters in the last 17 years that have had a decline in inflation, meaning deflation. Of course, going back to 2020, we had those two dips there. Those are the big fall downs in inflation numbers. And then all of a sudden we had our inflation surge. But if I look at this in average over time where inflation has been, I'll put a red line on that. That would equate to about 1.8 on the right-hand side of your chart here. Now, annualized, if it was 0.2 and you annualize that, that would come out to be 2.4% inflation. Now, people often ask me, well, Merlin, why does the Fed choose a 2% inflation target? Well, they assume that some element of growth in the markets is normal, and if you look at that red line, that would equal right around 2% annualized inflation. So I wanted to put that one there to give you perspective. Now, what's interesting about this is the previous reading, as you can see on the hard right edge of this chart, was 0.2%. Again, these numbers get annualized. So since this is done monthly, you take that number, times it by 12, and that will kind of give you an annualized idea. If it was 0.2%, that means we've got 2.4% inflation, assuming we had 12 of those readings in a row at 0.2. Well, what's happening this month? Well, take a peek at your chart up here. It's not expected to be that good. You can see a red arrow popping on your screen here. That's at 0.4, which is significantly higher than what we've experienced over the past 17 years. Now, of course, we did see some spikes there in 2021 and 2022 that brought us up to 0.7% inflation. Now, we're not at those levels, but certainly 0.4, as you can see by the red arrow on the right side, is significantly higher than the average over the past 17 years. And that, again, may become problematic. Why, you ask? Well, because Jerome Powell and the Fed have made it very clear that inflation is their number one concern. Unemployment rate is not an issue. We've seen that number slowly increase, but it's nowhere near becoming a problem. And as he cited many times, there are plenty of jobs out there. So all eyes on inflation. And since the market has already priced in over 6 rate cuts this year, we may have been setting our expectations a little bit too high. It feels to me like these inflation numbers, by being persistent and still sticking around, will force the Fed to not cut as soon as expected. Most likely they will stay where they're at. Now, the wild card here is if inflation numbers do tick up and then consecutively next month and next month and next month get higher and higher, the conversation may shift from, oh, rate cuts to maybe they start to raise rates again to choke out inflation. Of course, that could spook these markets going forward. So a lot of uncertainty coming. We might start to get more answers based off these CPI numbers, PPI numbers, and the Core PCE Price Index, which for all of you is happening Thursday at 8:30 a.m. Eastern Time. That, my friends, is your Monday morning must-knows. We'll see you next week.